Welcome back, everyone, and thank you for joining us. I'm your host, Tara McBride, Chief Marketing Officer at Prime Capital Financial. And today we're cracking open a barrel of insights on a global player that has more influence than your neighborhood HOA, but far fewer bake sales. OPEC, the Organization of the Petroleum Exporting Countries. With me are two of Prime Capital Financial's sharpest minds in market strategy, Deputy Chief Investment Officer Will McGough, whose hot takes are as smooth as a well-aged bourbon, one of my favorites, and Portfolio Manager Clayton Allison, who can find signals in the market noise like it's his superpower. Today we're talking about OPEC's latest headline grabber, the plan to increase oil production starting in June. Why are they doing it? What does it mean for markets, inflation, and your wallet? And who stands to benefit from what could be a drop in prices? We've got answers and just enough sarcasm to keep things interesting. Don't forget to grab your free resource. You can scan the QR code on the screen or hit the link in the show notes to download it. Okay, turning to you, Will and Clayton, let's level set so that we're all starting from the same place. Give us a little background on who OPEC is and why they matter.
Thanks, Tara, and I really appreciate the intro and the colloquialism there. So OPEC stands for the Organization of the Petroleum Exporting Countries. It's a mouthful. And so this major coalition produces roughly 30% of the global oil that we see. It's led by Saudi Arabia and then others in the Middle East like Iran, Iraq, and the UAE. When you add in the OPEC Plus, which includes Russia, their influence jumps to 40% of the global supply. So what does that mean? 40% in perspective is we consume about 100 million barrels a day and produce about 100 million barrels a day. The US, Europe, and China are net consumers. So these OPEC Plus members are the net producers. Their decisions when they tighten or ease production swings oil prices around. Being a guy from the South, the best way I can put it in perspective for those Dukes of Hazzard fans is OPEC is always stirring things up. They're never quite predictable, and they're guaranteed to make a scene when they show up.
I love a Dukes of Hazzard reference. I fully anticipate the two of you are going to start sliding across hoods on cars, but we'll save that for another episode. So OPEC, they're kind of a big deal. Got it. Clayton, talk to us about what they just did.
Yeah, Tara, thank you. First things first, I think that sarcasm comment was directed at me, so I kind of appreciate it. And I'm gonna leave the hood sliding to the good old boy down south, Will, over there. Now, like you said, yes, they are a very big deal. What they came out this past week and announced, though, was that they were going to be increasing their production by 400,000 barrels a day starting in June. Now, like Will mentioned, they are predominantly led by the Kingdom of Saudi Arabia. What they say pretty much goes for the rest of the cartel. Now, what's really interesting about this is that this is a pretty seismic shift as to how they've been running their production quotas as of the last pretty much year and a half, which was that they were purposely curbing production in order to support oil prices. Now, like Will mentioned, net exporters, net producers, typically they're going to make more money when oil prices are high. So the fact that they're now going to supply the market with more and more barrels, it's going to put pressure on oil prices. And obviously, they're going to make less money as a result of that. However, a lot of people are seeing that this is more of a targeted effect towards cartel members that have not been playing by their production quotas, namely members like Iraq and Kazakhstan who have been pumping beyond their quotas. So Saudi Arabia is kind of coming back in, laying the hammer, making sure they take back market share and putting other members in their place right now. But that has rippling effects for the entire global economy at that point.
Wow, 400,000 barrels a day. That seems relatively, I don't know where that sits on the spectrum, but it seems like it's pretty huge. How often do they make announcements like this? Why does it matter from a macro standpoint, Clayton?
Yeah, I mean, that's a great question. So typically they meet 2 times a year in, funny enough, Vienna, Austria. You'd think a lot of Middle Eastern countries would have a headquarters probably closer to home, but they have it in Europe. Can't blame them for wanting to go to Vienna. I mean, it's a beautiful place. Now, they have those meetings twice a year, typically 6 months apart. Now, they can have extraordinary meetings in place of that if necessary. Now, you're asking, why does it matter from a macro standpoint? Well, I think the simplest answer is, a lot of people know this, energy prices are a core part of headline CPI and inflation data. So if you start to see a fall off in oil prices there, you start to see some disinflationary pressure. And ultimately, it is a main cost that the average consumer sees every day. When you're going to Quick Trip or Wawa or Sheetz, for those people up in Pittsburgh where you're at, Tara, you see lower prices at the pump. That leads to more discretionary spending from a consumer standpoint. You got a little bit more buying power in your back pocket. Now, what that also does is if you see inflation kind of start to come down, you start to hear clamors for lower interest rates by the Fed. So this has a trickle-down effect all the way to policy-making decisions, which is why it's such an important thing from a macro standpoint.
Thank you for the shout out to those Pittsburgh convenience stores. They're amazing. So speak to me in the simplest terms, Will, right? Like we really want to talk to the average investor like me, like my friends, and the people who are out there listening. When I hear inflation, my initial reaction is that's bad. And so it sounds like what Clayton is saying is that disinflation is good, right? Is there a cascading effect on the economy when oil prices fall?
Right. So oil directly is not that much of the GDP. It's about 5 to 6%. But when we talk about the cascading effect that Clayton just mentioned, it jumps up to almost 30% of GDP. Remember, it's an input to pretty much everything: transportation, agriculture, manufacturing. So lower oil prices can actually stimulate growth while reducing inflation, which is the opposite of the situation that everybody's been talking about over the last couple of months in stagflation. So I think this is just one of the major macro drivers. Equity markets, rates, the US dollar, and oil are all key inputs. And one of those key inputs is having some positive news come through that could affect the economy. As always, there's a lot of minutia involved, so I would say speak with your financial advisor to see how it directly affects your situation, and make sure that you're ultimately allocated within a prudent risk budget according to your goals and objectives.
Absolutely, absolutely. Talk to somebody who understands this stuff. OPEC wouldn't be doing this if someone out there wasn't winning from this move, right? So both of you can answer this, maybe take your turn. So who are the beneficiaries of all of this?
I'll keep my answer short. It's basic Econ 101, supply and demand. We obviously know they're going to increase supply with this announcement. It should see demand side come up. So I think in this case, it's a win-win for everybody, the producers and the consumers of oil. But again, nobody has a crystal ball in the investment world. We just all have general ideas of where we think it may go. So we're gonna have to wait and see if that crystal ball, how it looks in hindsight here in a couple months.
Yeah, I think that's perfectly well put, especially from a high-level view. Now, for those of you that are interested, if you're looking for specific pockets in the market that might benefit from lower oil prices, you can really start to look at, obviously, the energy supply chain. Usually it's broken up into like 3 pockets. It's called upstream, midstream, and downstream. Upstream, you've got oil drillers. They're trying to get the oil out of the ground. They benefit when prices are high. Then you have midstream companies, which are all the ones that own pipelines that are moving the product from one point to another. And then you've got downstream, so your gas stations, your refiners, the ones that take oil and produce it into gas. Now, the ones that typically do better in a lower price environment, the midstream companies with those pipelines, names like Kinder Morgan, because a lot of these other companies do what are called take-or-pay contracts. They're paying for a certain amount of volume, so these pipelines will get paid regardless of how much is actually flowing through the pipe. Those contracts are typically long-lasting. And then on the other side, when you've got oil refiners, obviously crude oil is a major input to cracking into gasoline. So obviously if your main input is a lower price, your profit margins are going to be a little bit higher. So names like Valero typically see, outperformance in these types of times. And then going outside of energy in particular, any kind of company that's really seeing fuel prices as their main cost of business, so airlines, trucking companies, so Delta, Southwest, things of that nature that are going to be able to benefit from lower jet fuel, especially as you head into like the summer travel season a lot across America this summer. But a lot of that is obviously dependent on how long this low price environment lasts and really how long Saudi Arabia is willing to essentially operate at a budget deficit by purposely keeping crude prices lower to get their cartel members back in line.
Well, that is fantastic analysis. That's a wrap on our team's look at OPEC's latest strategy shift. I can't believe we covered Dukes of Hazzard, Sheets, and Wawa. What a great episode. So whether you're an investor, an economist, or just someone who's tired of guessing at gas prices like it's a game show, we hope today's discussion brought some clarity. If I made you or we made you snarf a little, little laughs, even better. Big thanks to Will McGough and Clayton Allison for bringing the insight, the context, and just the right amount of healthy skepticism. Don't forget to grab your free companion resource. You can scan the QR code on the screen or click the link in the show notes. Thanks for tuning in. Remember to stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market. Until next time, may your oil prices be low and your market confidence high.